Hey there everybody, it's Brian Gormley with another edition of Where in Greater DC. As everyone knows, we film all over the Greater DC metro area, Baltimore down to Northern Virginia, and different location each week. First person to get the correct location and send that guest to support at cornerstonepropertieshomeinfo.com wins a free prize. So that's support at cornerstonepropertieshomeinfo.com. We have been filming this stuff for I think almost 4 years now. That's quite a few places if you do the math, so got to get a little bit more challenging. I am looking this week for just the city that we're in right now. Hopefully you can kind of see the neighborhood behind me. Well-known area in this part of the woods at least, and maybe you could do a little bit of internet research if you don't know. Send those guesses in and get a free tasty morsel, whatever we're giving away this week. So. That said, we also, I announced last week, are having a free luncheon. It's going to be February 12th. It's a Wednesday. Mark your calendars and sign up. There's a link on our site. Should be a link that you can take through seeing this video as well. Sign up our site. It's free lunch. We're going to do talk about how to sell properties that are in distress. We have a kind of a standard short sale discussion that we've been given for a couple years now, and we're going to talk about rehabbing houses, JVing with homeowners as we promised last week as well. Pretty neat opportunity, because a lot of people are gaining equity right now, and so they've got an opportunity to sell their house without having to do a short sale. So come and learn. There are a couple of other avenues for selling your house. So if you're a realtor, if you're a seller, take advantage. Get a free lunch. To be determined location, but I'm sure you'll be well worth your time. It's very interesting because across the country, statistics are strong with the real estate market. There were only in 5 or 6 states across the country that actually increased in 2013 the number of foreclosures from 2012, and guess what? Maryland was one of them, and not only that, Maryland had the largest percentage increase, something like 144%, 147%, something like that, increase in foreclosure filings, 2013 over 2012. So it's just because the numbers are looking good across the country doesn't mean that real estate isn't local, because it certainly is. So take advantage of that. Sign up for the free lunch. We need a head count to send to the restaurant. Okay, so topic. After all those announcements, topic for this week, we are talking about bond buying, and realize that a lot of people don't necessarily know what the quantitative easing, the Fed purchasing bonds is really all about, and how that impacts our marketplace, and specifically with respect to interest rates. So just wanted to touch base, give a little bit of insight into that. In the last few years, the Federal Reserve has stepped in to help stabilize the housing market, in addition to controlling the Fed funds rate, which basically sets the the overnight rate for lending, which ultimately sets the rate for mortgage rates, 10-year treasuries, and so on. They've been buying mortgage bonds, and mortgage bonds are things that real estate conduits sell. Okay, so securitization firms will package a bunch of mortgage bonds. Freddie and Fannie have done this for decades, and sell little pieces of them. Okay, and so when the supply and demand is such that if you buy a lot of those bonds, if the market can absorb that, then mortgage rates go down. Because there's a lot of demand for it, and so a lot of competition, so that pushes interest rates down as well. And so the Fed has stepped in and has purchased, to the tune of $85 billion a month, these mortgage bonds, and they've been doing it for the last couple of years, and that's really helped stabilize the housing market. Okay, so in the fall, Bernanke said, well, we're thinking about tapering, meaning lowering the amount of bonds that they're buying each month. And as everyone knows, the market kind of overreacted to that. Stocks went down, interest rates jumped up by, I remember it was like 3/4 of a point or a point, from in the 3s to the high 4s, just by a sentence that he publicly made in a press release. And they since, retreated from that, and so they waited till the end of the year. Now they have decided to go ahead and start that tapering process, meaning they see employment strong, they see inflation under control. And I say employment, I mean unemployment. Unemployment numbers are still, fairly down compared to what they were. And the overall economy is strong enough to begin easing that bond buying program. So what does that mean? They are lowering the amount of bonds that they are buying, which means they need more capital from other sources to maintain that same interest rate, which won't happen. So the interest rates will just tick up just a little bit. It's not a $85 billion a month to zero. It's $85 to $75 billion a month to 65. So most people think that the tapering will continue into 2015. So it's a gradual easing. But the net effect of that is higher interest rates, which of course mean downward pressure on housing prices. So we'll see what effect that has. The idea is to kind of have a soft landing, meaning in economic parlance, meaning that it's not a distorted market or a big kind of earthquake effect, but rather you sort of go down softly as a soft descent so that the market has time to absorb these bonds and get back to quote-unquote normalcy. So anyway, that's what's going on with that. We'll see what effect it has and what long-term policy actions the Fed needs to take to maintain it. Obviously, with a lot of people not reporting that they're unemployed, they just exit the workforce. Some of these economic data may be a little distorted, and so we'll see. We'll see what happens. But that's what's going on, and so just wanted to explain that. So okay, support at Cornerstone Properties, homeinfo.com for your guests. Don't forget to sign up for the free lunch, February 12th. It'll be in the middle of the day. Usually we start about 12 and get you out of there about an hour and a half later. Look forward to seeing you. CapitalShortSale.com is our site. We do negotiate short sales for free as well. Might as well throw that plug in. I will see you next week.